back. I think it's time that people start preparing for the US midterm election. That's going to be the topic of this video because we have a lot of information to suggest that US midterm elections are generally very bullish for the markets. We also need to look into election cycles. We know about the 4-year cycle. Election cycles are slightly different from the 4-year cycle. It's something worth looking at. And with the election coming up in just about 2 days, just over 48 hours, it's something that everyone involved in the financial market, anyone involved in Bitcoin specifically, and the S&P needs to be looking at. So let's get into it, guys. Again, before we start the video, if you haven't signed up and become a VIP member, you can do so using the link in the pinned comment below. We post 5 trading signals a week. We've had massive profits there. We're releasing the results on the 13th, so get keen for that. Cheers, guys. Okay, so first and foremost, before we get into any of that, we need to go over what's happened with Bitcoin. Our buying plan has triggered. We closed above 20.8K. If we go up and zoom to our buying plan here, we can see this is how we react now, from now onwards. Obviously, we bought 50% at 20.8K. If we go down from here, which is very much possible, guys, I've never discounted that. In fact, the 4-year cycle theory is still very much active, and it still does predict a Q4 bottom, so that's not invalidated yet. So we could very well go down from here. If we do that, you have 2 options. You can sell at a close below 20.8K and cut the losses at about 1 to 2%, which is very minuscule. Or you can buy 50% at 17.5K to 18K and hold on to the amount you have now, giving you an average price of around 19K on Bitcoin, which is pretty good. And if we go up, of course, when we break the 200-day SMA, that would be the remaining buy, the 50% buy. Now, I'm a believer that the the bear market will not be over until we actually break 28.6K. That is the definitive level. I'm going to make that pink so you guys can see it on the screen here. That's where I believe the bear market will be over, because that would kind of flip this entire downwards block we've seen here, flipping that entire range and bring us back into sideways consolidation territory in a macro scale. But I'm not going to be waiting until 28.6K to buy. I'm trying to get in early, right? Because if we wait till 28.6K, all of a sudden we're up already like 60% from the lows. You've kind of missed it. You've missed the boat, right? Looking at the hourly chart on Bitcoin, we broke a triangle to the upside. That took us above 20.8K. And now we're seeing a bullish descending channel pattern start to play out. It's actually a bull flag pattern formation here. And if we take a measured move from that bull flag, now take note here. Bull flag measured moves are very over-optimistic in some cases. This is one of those cases, but the measured move does target a price region around 22.7K. Look, again, very over-optimistic in my opinion. I don't think we'll go that high without seeing some sort of, pullback of some sort, but that's what it's targeting. That's just what the TS says. So, bull flag, not looking too bad. Short term's not looking too bad. Medium term's starting to look a little bit good. But I will say this, and I'll say it again, but there's no guarantee at all. In fact, it's not even super likely that we continue upwards here. There's so much going on over the next few days, it's impossible to give you guys a clear, concise answer. But what I will say is this: you need to be aware of the stop loss in this buying plan. If we close back below 20.8K, that's going to be an indication to get out of that buying plan. Or again, you can hold on to it. You can hold on to the position. Look, realistically, in 6 months from now, Bitcoin's going to be higher than it is now, right? That's a pretty broad and pretty widely accepted assumption to make. It depends on how fussed you are about your average price. So it's up to you really. But now we're going to get into the main part of the video, right? Because if we go back to the hourly chart, we can see that these lines here, these yellow dashed vertical lines, they represent 2 major events that are going to happen soon, right? The first one here, the closest one on the 8th of November, is actually the US midterm election. And the furthest one away is CPI. Both of which are very major events. We're going to be discussing the US midterm election in this video, and CPI we'll get into in a later video. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Megaworld Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks guys for watching the advertisements. Let's get back into the video. Okay, so firstly, what is a midterm election to people who aren't from the USA? I'm personally from Australia, but I understand it pretty well. Just going on a website here, just giving you a brief explanation here. US elections are essentially for Congress, right? They're essentially for House of Representatives and for the Senate. What that means is that they don't change the president. If the Democrats lose the midterm election, for example, Joe Biden's not going to get kicked out of power or whatever. The point is, Joe Biden has a certain, and his team, etc., have a certain, agenda or whatever that they want to push on certain issues, for example, climate change, and them being in control of the House of Representatives and the Senate enables easier pushing of those bills they want to introduce, where if the Republicans, for example, come in and win, quote unquote, the midterm election, it's going to make it a lot harder for Joe Biden and his team to implement what they want to implement in regards to certain issues. That's essentially what it is. So it doesn't change the president, but it does have a massive impact on the markets, right? Because we're essentially talking about something that's having a massive impact on who decides what policies are going to pass, or what bills are going to pass, and how easy it is for certain bills are going to be passed. That's what this is. So that obviously has a massive impact on the markets, because bills that people thought would have been passed might be, put up in the air, right? Because different people might be having different amounts of influence in deciding whether they pass or not. Very complicated stuff. But essentially that's what it is. And so midterm elections are very big for the markets. They do have a massive effect on the markets, right? And we've seen this. If we go to Market Watch, all we need to do is look at this data they pulled out, right? For 17 out of the last 19 midterm elections since 1946, since just after World War II, the stock market performed better in the 6 months after the election than it did in the 6 months before the election. Therefore, using that data, out of 17 out of 19 midterm elections, the stock market performed better after than it did before. We can assume, based on that data, that the stock market will actually, do not necessarily go up, right? But do better. Okay, it's very important distinction to make, right? Stock market's been going down massively for the last 6 months, massively, right? Now, it doesn't mean it's going to go up massively now. It means that it's just going to do better than what it did. So it could still go down. But the point is, the downside pressure, the immense downside pressure will be diminished, right? It's getting to the point where we're starting to slightly see the balance kind of reverse, right? I do expect stock market and S&P 500 specifically to go down a lot further. I don't expect the lows to be in, and I'm making that assumption based off interest rates. We've never seen the stock market bottom out while interest rates are increasing. It simply has not happened, and we have every reason to believe that interest rates will be increasing for at least the next few months. So no, I don't think the bottom is in the S&P, but that does. This 6 months time frame, of how long it has to do better than the last 6 months, it gives us enough time to potentially start to perform quite well towards the end of that time frame there. I will also say this, and this is another interesting chart by Market Watch. If you're looking at a 6 month rolling average of performance in the S&P 500, basically essentially on post-election years, midterm election years, pre-election years, and election years, you can see that from the months of essentially July through to the month of December in the following year, on midterm election years, you see crazy performance on the S&P 500, right? Generally speaking, the S&P 500 is dramatically outperforming, right, any other year on midterm election years. Midterm election year, of course, is this year, right? Therefore, in the 12 months following November, therefore, we can expect, and also based on the previous sentence we just looked at there, we can expect the S&P in the next 12 months to do very, very well, right? We can expect it to start picking up. And this kind of lines up pretty well with, even technical analysis in general. When we see a bottom, which I'd expect to happen in the next, say 4 to 5 months, whatever, when we see a bottom on the S&P 500, you don't just go sideways after a bottom, you see dramatic gains, right? And that lines up perfectly with what we're seeing here. So yeah, we might go down a lot further, but the point is when we do bottom out, right, it will be a violent upswing. It will be, because generally speaking, when you bottom out, what's happened is there's been an overcorrection by the bears. When you top out, there's been an overcorrection by the bulls, and you need to see a pullback in either direction. So when you bottom out, it means the bears have been way too strong for a period of way too long, and the bulls finally realize, hey, wait on a second, this is dramatically undervalued, and they buy very quickly, and then you see a quick, rapid surge. That's what happens at bottoms, right? And you can even see that on Bitcoin. If we go back to historical data on Bitcoin, yeah, we see these rounding out formations, but that's kind of like the balance shifting, the balance of power shifting. Then after that, we see dramatic pumps. Okay, it happens every time. It's the same thing with the S&P. So The midterm election data from previous years is this: 17 out of the last 19 mid-election years, we've seen the S&P 500 traditional markets perform better in the 6 months after the election than it did before the election. Why is that? Possibly because there's a dramatic amount of fear in the market before the election. Uncertainty, people don't know what's going to happen. They're waiting for data to come in. When they see who won, they're more confident to invest because they can make better predictions about the future. I see no reason why the same thing's not happening here. So we have a chart here let me bring it up, by Income Sharks, saying midterm election years tend to be weak, but the following year is typically strong. And why is this? Well, it's because midterm elections happen at the end of the year. So the actual year itself is generally very bearish, but the year following, possibly based on the midterm election results being in, is very strong. So we can expect next year to be a very strong year for the S&P 500 and hence Bitcoin. Okay, and that's a given. Even by the 4-year cycle theory standard, that's a given for Bitcoin. Okay, because the 4-year cycle theory expects the bottom to be in Q4, and that would label this a bad year. And then next year, which would be the year after the midterm election, would be bullish, even by the 4-year cycle theory standard. So what I will say is this. People often talk about presidential cycles instead of the 4-year cycle. I would say that they work together, okay? Because every 4 years, there is a midterm election. Every 4 years, Bitcoin is bottoming out in the bear market. The year after Bitcoin bottomed out, the market goes up, and the year after the midterm election, the market goes up as well. So the point is, they work together. It's not like you have to pick between election cycles and the 4-year cycle. They both work together. They're conveniently placed at the same time period, and they both work together to bring the markets up. So this is overwhelming data here. Hey, what we have, and I could look at charts all day because I really can, right? The point is we have overwhelming data to suggest that next year will be bullish for not only Bitcoin, but for traditional markets. Bitcoin based on the 4-year cycle and the traditional markets based on the midterm election data, right? Now, the big question is what happens to the rest of this year, right? And unfortunately, we can't really answer that. We've tried many times in the past, but there's so much conflicting data because the 4-year cycle says we go down further. Traditional methods of finding the bottom, such as the pi cycle, say we've bottomed out. If we look at the CME chart on Bitcoin, we've already seen the Q4 bottom on the CME chart. So does that mean we still have to see it, or does that mean we can go up? There's so many questions to be asked about this kind of thing. One thing I would like to look at is this. Seller exhaustion, right, on the on-chain data has reached levels we have not seen since November 2018. Now, generally speaking, when seller exhaustion reaches these low levels, it's bullish. In fact, 6 out of the last 7 times we've seen these levels preceded major upside price action. The only problem is this. The one time it wasn't bullish was November 2018, just before the massive 50% correction. And as you guys know, the pattern we're seeing right now is pretty well resembling November 2018. So again, it just adds to the confusion. So much confusion in the market right now. The only thing I can really tell you to do and just advise people to do, not advise, but I guess my kind of personal action that I'm doing is following the buying plan, right? Do I think the market's going to go down further? I would lean towards saying yes, it will. But we have to have a plan, and we can't sit back and watch the market go to 28K without us, right? We have to have a plan. That's why I have this buying plan here. So let's hope it plays out like that. I personally hope the market goes up. Again, I'm not entirely sure. The 4-year cycle would compel me to believe that it will go down further. The only reason it's slightly confusing, again, is because the CME chart already saw the Q4 bottom. So does the price chart need to? It overly complicates everything, and I apologize about that, but that's just what it is. So important video, guys. Midterm election. It means next year is going to be pretty bullish, most likely, almost certainly, according to the historical data. So it should be interesting to see what happens next year. And I suppose the main point of this video is this. We've only got a couple more months of 2022, and then all data suggests that 2023 will be a pretty good year for traditional markets and Bitcoin. Maybe the latter half for traditional markets. Maybe the first half might be a bit rough still coming out of a recession, but is what it is, right? So thanks for watching. Hope you enjoyed, and I'll catch you in the next one. Cheers.